Mbuthia, thank you so much for joining us. Let's start with Standard Chartered Kenya's results that came out. It's one of the banks that has shown the highest profit growth among all the banks that have released their first half results. What risk management strategies did this bank put in place?
For one, I don't think Standard Chartered has aggressively targeted expansion in Kenya as much as other banks. For example, Barclays Bank yesterday announced that they would be pulling back in the expansion program. So Standard Chartered Bank, unlike BBK, did not do this, and this is one of the factors that has led to the increased growth.
Well, we saw yesterday Barclays Bank's profit was up purely because of interest income. Standard Chartered's pre-tax profits are also up about 30%. Interest income, is that how the bank is going to sustain itself in the future?
It looks like most banks are relying on interest income as their major source of earnings. This is because Barclays Bank and Standard Chartered also recorded a dip, so to speak, in deposits. And interest income is basically their mainstay for the moment.
Well, another aspect of Kenya's Standard Chartered Bank is that it's counting on mobile banking to bring in profits. Why mobile banking?
With M-Pesa from Safaricom maybe showing the way, most banks have realized that mobile banking is the way to go. Most banks have put in place measures to increase their mobile banking facilities. Equity, Standard Chartered being one of these banks.
And take us through how the bank will bring in more customers in the next few months.
Mostly it's in corporate. Standard Chartered Bank is concentrating on their corporate side. Retail has basically been dominated by Equity and Cooperative Bank. And in a sector where you find that is overbanked, such as ours in Kenya, Standard Chartered will concentrate on corporate banking mostly to bring in their deposits.
Looking at Equity Bank as well as Barclays Bank, do they also have mobile banking right now?
Equity Bank does. Barclays Bank, not really, but they are about to roll it out as well.
So how competitive is mobile banking in Kenya?
Very competitive. Safaricom, for example, earned about 10 billion shillings from their mobile banking M-Pesa service solely, and it's a telecommunication giant. So mobile banking is the way of the future.
Well, Standard Chartered has spent about 4 billion shillings, and a huge portion of it is going towards mobile banking for Standard Chartered Kenya. How sustainable is that?
With our telecommunication industries, it's on a buzz right now, and the growth potential in it is pretty good, and we expect that Standard Chartered, noticing this, is going to increase even more on their mobile banking services.
All right, and just before we go, what is the growth profit outlook for Kenya Standard Chartered?
Sorry?
What is the outlook for Standard Chartered?
With the growth of 30% recorded now, we expect that they should do about 25% by the close of the year ending results.